Matthew Bell with InsurancePrescription.com. Today I wanted to talk a little bit about debt settlement. So debt settlement is one of many options that a person has when it comes to trying to discharge the debt that they have. Some other options would include debt counseling, debt consolidation. Some extreme options would include filing for bankruptcy. There are a number of different chapters or different kinds of bankruptcy. This is not the purpose of this video. But in a case of a debt settlement, essentially what would happen is you would negotiate with a particular amount of debt. You would negotiate with the creditor so that the creditor would be in a position to accept a lower or lesser payment as payment in full. So for instance, if you owed $30,000 in debt and you got the creditor to accept $15,000 instead, then you would have settled that debt at 50% of its original amount. And this is not uncommon to experience a 40%, 50%, 60% reduction in the amount of debt. Now there are some drawbacks to this approach, and we'll get to those in just a few minutes. Often they're going to be used for larger amounts of debt, so it might be for one debt, or it might be for a series of debts. You might be negotiating for a lower payment that you're going to make installment payments on, or you might be negotiating to pay off your debt in one lump sum. And depending on which avenue you want to pursue, it's going to kind of point you in one direction or another, as I will explain in just a moment. So according to Google, the average amount is in the vicinity of about $30,000 for people who are looking at and using debt settlement as an option. And once again, to settle essentially means to reach some kind of agreement through negotiation between the debtor and the creditor in terms of an amount that is going to be accepted in lieu of payment in full. Now, it is possible to use a debt settlement company for something along the lines of this, and there are several reasons why a person might prefer to use that sort of approach. One reason is that debt settlement companies often have relationships with various creditors, so they might have a relationship with your bank, with your credit union, with your credit card company. They may already have some sort of agreement in place so that it's very easy for them to make that negotiation happen and to make that settlement happen because they have a reputation and the creditor knows who they are and they have that kind of relationship together. Another reason that is related to the first is that they have presumably expertise in negotiation that the average creditor may not have. So if you have just accumulated debt over a period of a decade or more, and this is the first time that you've been in a position to have to settle debt, then you might feel ill-prepared to enter into a conversation with the creditor, and therefore you might feel better if you had some kind of a professional negotiating on your behalf. But of course, the primary thing to note about going through a debt settlement company is that you're going to pay a fee for their services, right? They're not going to do it as a charitable work for the most part. Now, in some cases, and I should say, put a little asterisk there, in some cases there are debt counseling services that will assist you at no cost, and you might find a debt counseling service that is competent to kind of give you some tips or pointers in terms of how to negotiate. But for the most part, people are going to be a little bit hesitant going on the record and because they don't want to be held liable for any advice that they give you. And with that, I should say I'm not a financial advisor. I'm not an investment advisor. I'm not a debt counselor. I cannot give you specific advice. This video is for general, informational, or entertainment purposes only. If you do need personalized assistance and recommendation, then I would suggest that you consult with a competent and licensed professional in your area. Now, in the introduction, I did mention that whether you are looking to make installment payments or pay your debt down in one lump sum is going to kind of point you in one direction or the other. So the general impression that I've gotten from dealing with this in just sort of a cursory and peripheral capacity is that if you are looking to make installment payments, so you're looking to bring down the amount of money that you're spending every month in debt payments, then you might go through a debt settlement agency because the debt settlement agency is going to be expert at negotiating this lower payment. They may even take on the debt. They may purchase it, and then you'd be making payments to the debt settlement agency instead of to the original creditor. But in any case, if you're looking to make installment payments, it may be worth the fee that you would pay to the debt settlement company. They might charge on average between about 15% and 25%. Now, sometimes that's calculated on the amount of debt that you owe, and sometimes it's calculated on the amount of debt that you save. Sometimes it's calculated on the amount of debt that the settlement amount is negotiated down to. You want to make sure you understand the fee, because if you factor the fee in and you realize that your installment payment maybe is not saving you as much as you thought that it would because the fee is so high, then it may not be worth the damage that's done to the credit score. And I'll mention that again more in just a moment, but it may not be worth the damage that it does to your credit score and some other things in order to debt settle if the fees are very high. Now, I've seen fees that are as low as around 10%, as high as around 30%, but again, generally speaking, they're in the neighborhood of about 15 to 25%. You probably also want to check out ratings for the debt settlement company that you're planning to go through. There are many online rating services. Perhaps the Better Business Bureau in your area may also have information that's relevant in this regard. If you're not looking to make installment payments, so suppose you have a lump sum amount, you have some amount off to the side and are capable of making a lump sum amount to pay the debt off completely, it's probably going to be in your best interest to try to negotiate the debt yourself. Because number one, you're not going to then pay any percent, you're not going to pay any fee to any debt settlement company, you're just going to settle the debt up directly with the creditor. Now, they're much more likely to deal with you in the case where you are offering to pay off the debt in a single lump sum, because then they don't have to mess around with installment payments. Obviously, for many people who are in a position of settling debt, they've missed one or more payments, and so the creditor is going to be shy about accepting a new payment structure generally. They will do it, and they're happy to continue to charge interest. But if you just want to be done with the debt and you have the ability to pay it in a lump sum, it can be advantageous. Now, that's actually the way that I did it. And again, this is not particular advice, but it's just kind of for informational purposes. One thing that I did was mention that I was interested in dealing with the debt. I mentioned that I would prefer to not have to file for or enter into any kind of a bankruptcy or settlement arrangement that involved a court. And essentially, I would like to just discharge the debt myself. Often, there's not much of a negotiation. What happens in many cases is that they have a schedule. It depends on how much you owe, how far behind you are in your payments, what they will be willing to accept as payment in full for that debt. And they'll tell you. And if the terms are agreeable, then you can accept it or you can decline it. In my case, they settled the debt at 59%. So my debt was about $15,500 prior to the settlement, and after the settlement was around $9,100. So just using $15,500 just for easy math, 59% of that is $9,145. That's about what I settled it for. And then I paid it in a single lump sum payment. So let's just go briefly through a few pros and cons. So a pro, obviously, is that the debt is reduced. So I saved 41%. My debt was discounted, if you want to think of it that way, by 41%. So instead of paying $15,500, I paid $9,145, and my debt was essentially considered paid in full. Now, that's the major pro. It got rid of that particular piece of debt. Now, there are a number of cons that you should be aware of, and I'll list a few of them here. First of all, again, if you go through a debt settlement company, you can expect to pay a fee, and that's going to tack on anywhere from about 10 to 30%. Probably it's going to tack on at least 15 to 25% onto whatever installment payment that you pay. In addition to that, your credit does take a hit. So unlike debt consolidation, debt settlement does reduce your credit score. And this can be anywhere from 50 points, 60 points, 70 points, all the way up over 100 points. The average is around approximately 75 to 100 points that your credit score can be negatively impacted. Now, this isn't the only consideration in the credit score, but it does have a negative impact on the credit score. Additionally, you're actually taxed on the amount that is settled. So, for instance, any amount that the creditor writes off, they're going to send you a 1099 for the next tax year. Now, that can be substantial. In the year that your debt is settled, you can expect to receive a 1099-C. So, for example, in my case, my debt went from $15,500 to $9,145, which is a difference of $6,355. So, in that tax year, I received a 1099-C for $6,355, which I then brought to my tax preparer, and that was included in the calculation of my adjusted gross income. It's treated as regular income, and you're taxed on it at your regular income tax rates. Now, the rationale essentially is that any amount that you were loaned but didn't pay back was spent by you, and it would have then, in terms of your daily life, it it would have been treated much the same way as your regular income would have been treated. So that's the Internal Revenue Service's rationale. I'll display a 1099-C and put a link in the description if you would like to click on it and actually view it a little more. But 1099-C is a specific form that is geared towards cancel debt. And then, of course, you would take that to your tax preparer, and that would be included in your income tax return for that tax year. Now, there are a couple of exceptions to cases where you would be taxed. Those are mainly cases where this debt has been settled as part of a bankruptcy judgment, or in cases where you are insolvent. Now, this video is not a tax video. I'm not a tax preparer. I'm not a CPA. I can't give you tax advice. So consult with a tax preparer. But if you think that you might be insolvent, namely that your assets are less than the amount of money that you owe, then you may not have to pay tax on it. But once again, consult the tax preparer. So debt settlement isn't for everyone. If your credit score is good and you're simply cash strapped, you might consider debt consolidation. You might consider a home equity loan or home equity line of credit. You might consider credit counseling and just trying to budget and maybe tighten the belt a little bit and try to come up with some extra cash, possibly what's called a debt snowball, where you focus your attention on paying down one debt, usually either the largest debt, the smallest debt, the one that has the highest interest rate. There are different competing viewpoints on this. Mathematically speaking, you probably want to pay down the one that has the highest interest rate. People like Dave Ramsey recommend paying down the one that has the lowest amount that you owe so that you can feel like you're making progress. But in any case, the debt snowball may be an alternative. But if your credit score is bad, if you're really up against it, you might consider debt settlement as a way of relieving some of that pressure. But in any case, if you found something of value in this video, please like the video, please subscribe to the channel, click the notification bell, and you'll be alerted to new content as it becomes available. I thank you so much for joining me today, and I look forward to seeing you again in another video. Thank you.